Hello and welcome, everybody. I'm Stephen and I'm a popular investor on eToro. I haven't done a video for a little while, so it's now time to do a update video on my eToro portfolio. This week, I'm going to be talking about some of the things that happened in the markets last week, talking a little bit more about our strategy, and obviously what's very important for you all as well is performance. So I'm going to be running through that in today's presentation. If you haven't already, it goes without saying, please do subscribe to my channel, please like this video, and please try and engage as much as possible. So on to what happened in the markets last week. It was a pretty good week overall in the market, and our portfolio was up about 4.3 for the week. So I'm very happy with that percentage increase last week. If we compare that to the other benchmarks that we have, such as the Nasdaq, which was up about 2.1%, the S&P was up about 1.5%, and Bitcoin was up over 8.08%, which explained some of those outsized gains. As I said, China continued its recovery. China has been doing pretty well over the last couple of months or so, started to recover from that very poor performance at the beginning of the year. And it's actually doing pretty well now because the Chinese government are putting in a lot of different measures in order to stimulate and protect the economy. As I said, Bitcoin propelled itself to $72,000 yesterday. It's just a little bit off the all-time highs, but it's actually performing extremely well for this year. Or it also increased my positions in 𝘁cie. 𝘁cie had a drop over the last month or so. They had a few unlocks and a few other things, and obviously the market wasn't performing well. And so I thought it was a really great opportunity over the last couple of weeks to increase my position in 𝘁cie, and now it's one of my largest crypto positions. If we look at a 2024 year-to-date basis, our portfolio is doing extremely well and it's beating the majority of our benchmarks. So then our portfolio is up about 21.07% overall for the year. Compare that to the Nasdaq, that's up about 11.2%, and the S&P 500, which is also up 11.2%. Bitcoin is up a whopping 65.83%. So our portfolio is outperforming most of those major benchmarks. I'm pretty happy with our portfolio results considering the risk that we have in our portfolio. We're not a crypto only portfolio, but we're also not a stock only portfolio. So if I take those as a blended average, I'm still very pleased with our overall. If we look at March results, it's only a month to date because March hasn't finished yet, but we're up about 8.1. We made back some of the drawdown that we had last month, and now we are not too far off portfolio all-time highs. We're probably about 5 to 10% away from portfolio all-time highs. So pretty happy overall with how the portfolio is performing, especially on the back of a pretty good year last year as well. It all looks very positive. Okay, if we look at the main news for last week, most of the major indexes advanced to record highs over the week. We've continued to see a really good performance overall from the stock market. Again, that's on the back of another good performance last year in the stock market. Markets are looking pretty healthy. And if we look at the CPI data that came in last week, it also came in slightly below expectations. So headline prices, they rose just 0.3% in April. That was a little bit below expectations. And whereas core, which doesn't include food, doesn't include energy, those prices rose 0.3%, and that was pretty much in line with as it was expected. What we've seen is a concentration in services prices, especially kind of transportation and other service costs, which have rose over 0.9% over the last month and 11.2% over the past years. That's pretty much happening because of the issues with Israel and Palestine and some of those geopolitical issues that we have, which has caused some of those freighting costs to increase, caused some supply chain bottlenecks, which we have seen an increase in oil price, as well as seeing an increase in kind of some precious metals that are used for manufacturing, and also the cost of container freighting to ship things around the world. So that remains a little bit sticky, but I'd say CPI is fairly under control. If we look at retail sales in the US, the results last week, they impressed investors. So they were reasonably good results. What we saw is that retail sales were flat in April. And if we compare that to consensus estimates, they were about 0.4% gain. So what we're seeing is a downwardly revising its estimate of March sales lower from plus 0.7 to plus 0.6. So retail sales are also pretty healthy in the US. If we move on to Europe now, and in particular UK, what we've seen the annual rate of pay growth, that's excluding bonuses, was unchanged at about 6% in the past 3 months through March, which was slightly higher than forecasted. Obviously, there was a lot of inflation last year and the beginning of this year as well. And what you saw employers having to increase their pay in order to be able to satisfy the demands of workers, etc. Obviously not in line with actual inflation. But what we've actually seen is that's been unchanged over the last 3 months at about 6. If we look at the main unemployment rate in the UK, that has risen to 4.3%, and we've seen job openings decline for a 22nd consecutive month. So job openings are starting to decrease, and they're continuing to decrease over time, and the unemployment rate is rising slightly. And I think that's why we're expecting interest rates to start to be cut in the UK and in Europe over the next couple of months. What we've seen in Europe, the ECB policymakers have indicated that a rate cut is very likely in June, but they can't say exactly what the forecast is after that because the path is quite uncertain. They need to look at kind of the inflation data, CPI, employment, etc., to be able to make decisions. But it seems like the direction is changing from increased interest rates to slightly decreasing interest rates. As I said, Chinese equities have done well over the last month or two. One of the reasons is the Chinese government are really supporting the markets, especially because of those Chinese property sector and the ailing fortunes of some of those Chinese government kind of building companies and real estate developers, etc., who ran into trouble last year. And what we've seen that the People's Bank of China last week has lowered the minimum down payment ratio by 5% to 15% for the first time, and to 25% for second home purchases. And what they're really trying to do is they're trying to ignite that demand. People weren't able to get the down payments on houses, etc., and as the markets will fall, a lot of the value of the properties had fallen, etc. And what they're trying to do really is just stimulate the ailing property sector and trying to get people to buy again. So yeah, positive signs for real estate in China. We've also seen inflation data showing last week that deflationary pressures continued to weigh on the Chinese economy. The China Consumer Price Index, it rose 0.3% in April from a year previously, and accelerating from March's 0.1% increase and marking the third consecutive positive reading. So overall, in China, I think we're seeing a slight reduction of geopolitical pressures. We're seeing the property sector starting to bottom out and starting to slowly repair itself. And we're seeing reasonably decent data in terms of sales, spending, etc. We could be on for a very decent recovery in Chinese stocks because they are very undervalued. They have very low PE ratios, etc. And I think that they're very undervalued at these current prices. So it wouldn't take a massive rebound in the Chinese economy to lift Chinese stocks. What it would just take is for it to not be as bad as expected, for growth not to slow as much as expected, and we could see an extremely decent rally, especially in our Chinese stocks. So we have Alibaba, we also have JD.com and a number of 𝗃𝗏𝗃𝗀𝗃 and a number of Chinese stocks in our portfolio. And sooner or later, I think that they're going to turn around pretty significantly and work out very profitable for our portfolio. Okay, so the top 3 performing stocks for last week. The top performing stock for last week was Magnite, which is an advertising company. That was up about 30.85%, and the reason is that they delivered very good results, better results than expected in the quarterly earnings. So very pleased with that. That's starting to bounce back as well. The second best performing stock in our portfolio last week was Synthoma, and that was up about 17.5%. And then the third best performing stock in our portfolio last week was Alibaba, and that was up about 10.9%. And actually, all of our Chinese stocks did very well last week. Okay, so on to our Death by Charts edition. I'm just going to run through 4 different charts. So as you can see, the chart to the left is the US CPI inflation, and what we're seeing is consecutive months above 3%, seasonally adjusted from the year 1948 to April 2024. So what we're seeing is inflation in the US isn't really going away. We've seen for a 37th consecutive month, CPI came in above 3%, and that's 37 months is the longest period of high inflation that we've had since the late 1980s to early 1900s. So that inflation has been coming down from the highs that we experienced last year, but it's still on a very long period, the highest period that we've had for a long time, over 3% inflation. So the chart to the right I wanted to show you is the US auto insurance rates. And what you can see is we have seen skyrocketing auto insurance rates, and they continue to be a contributing factor, up to 23% in the past year. So that's the biggest one-year spike on auto insurance rates since 1976. So this has an effect on some of the inflation data that we're seeing, makes it quite sticky, and we're seeing really high auto insurance rates. That's pretty good for some of our companies in our portfolio, such as Ali, which does auto insurance, but it's a weighing factor on customers' overall spend. The third chart to the left I wanted to show you is the market expectations for the Fed's fund rate. So what this basically is a forward-looking chart which basically shows what's to be expected in terms of the interest rates moving forward. And what we've seen is as we entered the year, the bond market was pricing in around 6 to 7 rate cuts in 2024. The first one was supposed to be in March. But what we've really seen over time is as the inflation data remained quite sticky and it didn't go down as much as had been expected, now we're looking at potentially only 1 to 2 rate cuts before the end of the year. And the markets aren't actually expecting a rate cut until at least September now. So that's been pushed back. I think overall the direction is still pretty clear. I think we know that eventually those rate cuts will start to happen as long as inflation doesn't spike again, but it's going to be more delayed than expected. But if we've seen we've seen very good stock prices. We've seen the S&P 500, Nasdaq continue to hit all-time highs, and this is at a very high uh, interest rate environment. So once they start to come down, it could be very bullish for the overall for the market. The chart to the right I just want to show you was quite interesting, and this is the meme stock returns. And what I really wanted to say is that over the last kind of week to 2 weeks, there's been a kind of a meme stock rally, and that is because 𝗁𝗁𝗃𝗃𝗃, because he was a YouTube creator that we saw during that kind of GameStop rally in, what was it, 2021 or 2022? Yeah, so he's come back. He didn't make a video for about 3 years, and he's come back and he started to make videos. He started to post on Twitter, etc. And he has over 1.3 million subscribers on X. So he has a very large amount of people following him. And what we saw is when he started to tweet again, we saw GameStop and other kind of previously seen as meme stocks start to increase, such as GameStop, AMC Entertainment, etc. But what happened after that is they really soared. So we saw massive gains in GameStop, massive gains in AMC, but that slowly deteriorated over a number of days, and then we saw an overall decline of 60% from their peak levels last Friday at close. So what we're actually seeing is we saw that kind of hype cycle come back, but it was very accelerated, and then we've seen that kind of bubble start to pop again. So yeah, be very careful with meme stocks if you're invested in them. I wouldn't suggest them because the volatility is insane. There's not much fundamental value to these stocks. They're way overvalued. Basically, you're playing momentum. And when you're playing momentum at any time, the music can stop. And just like musical chairs, you can be left without a chair. And you can basically lose almost all of your money. So I wouldn't suggest it. Best to take a long-term approach overall to the market. So as we move on to the crypto news and views, what I wanted to talk about first of all was the overall market, and then I'll go over a few kind of news stories. So has done very well this month in May so far. It was a difficult April, but what you need to know is that April was on the back of 4 consecutive months of quite large gains in Bitcoin, and it was on the back of that Bitcoin ETF, spot ETF approvals, and then all the inflows, etc. So it did have a pullback in April, but what we've seen is that start to recover again in May, and now we're pretty close to all-time highs. We're probably 5 to 7% off all-time highs as we speak right now. And I think what we've seen a number of ETFs approved in different countries. So we've seen ETFs approved in the US. There's already been one in Canada for quite a while. Maybe 3 weeks to a month ago, we also saw the approval of Hong Kong ETFs. There's hope that eventually those will get opened up as well to Chinese mainland customers. There's the potential of South Korea ETFs, Japanese ETFs, Australian ETFs. UK will be a little bit further behind that. What we're seeing really is this kind of just being accepted as a financial product in the old traditional finance sector. So quite likely that a lot of those are going to get approved. They're not going to be as big as the US, but if we add each country and just consider them as additional inflow, as a cherry on the top, then what we should see is increased demand for Bitcoin over time from institutional investors. We're also quite likely to start to see companies put Bitcoin on their balance sheet. And I know for a fact through the podcast that I am also running on the side called Achieving Alpha, that there are nation states that are actually buying Bitcoin right now, but under the radar. Haven't been announced yet. And we don't know when they're going to be announced, but why would they announce them? Because they're trying to accumulate Bitcoin, so trying to front run the price. So looking very positive overall on the demand side. If we look at the supply side, obviously a couple of weeks ago, we had the Bitcoin halving. So the miner rewards have cut in half. That means that there's going to be a lot less selling pressure overall on the market. And the last thing that I really wanted to talk about in terms of the supply is that the Bitcoin on exchanges is at and very close to an all-time low level. So this means that there's not much Bitcoin on exchanges to be able to sell. A lot of them are in cold storage, etc. It just shows that at these prices, sellers are not willing to sell at the moment. So with that kind of supply crunch as well, not being a lot of Bitcoin exchanges, with the demand, I'm expecting us to surpass all-time highs and go on a good run over the next couple of months. I also wanted to talk about the Ethereum spot ETF. So there has been a lot of negative talk over the last couple of months about the Ethereum spot ETF. And a lot of the experts were giving a very low percentage chance of that being approved in the near future. And the reason is there wasn't much dialogue going on between the ETF providers and the SEC. Just like that at the end, when just before Bitcoin was approved, there was lots of discussions very regularly with the different providers, and it showed that there was a pressure on them to approve it. But there hadn't been those kind of meetings behind the scenes to indicate that there was a high chance of them being approved, especially considering a lot of them had in the ETF applications the ability to be able to stake their Ethereum, etc. And it was widely viewed that was very unlikely to be approved. What we've seen over the last couple of days is increased rumors that they are going to be approved and that there is a lot of pressure on the SEC to approve those. And they're starting to meet with the different providers, again, just similar to what they did just before the Bitcoin spot ETF. And they've actually asked companies such as BlackRock to actually remove the staking from the Ethereum ETF application. So we've seen a lot of the experts on these ETFs and these approvals go from 20 to 25% chance of that being approved at the next approval date to over 90% now. So there's quite a high chance that these Ethereum ETFs are going to be approved over the next couple of months. Again, I think it's very positive for Ethereum. We saw a big spike on those rumors. And I think it's going to be positive for Ethereum, but I think everybody needs to consider their expectations. It's probably not going to be as high volume and high inflows as there was into Bitcoin, but it does give Wall Street a good opportunity to be able to buy more Ethereum, and that could be good for current Ethereum holders. Last thing that I wanted to talk about as well is in terms of Congress. In the US, there's been a number of bills by the Democrats in the US which have been anti-crypto. And it's quite interesting to see the kind of difference of the approach between Joe Biden and Donald Trump in terms of their election campaign. So previously, in the last election campaign, while Donald Trump was actually the president, he was a little bit anti-crypto. I wouldn't say he was totally anti-crypto, but he was a little bit had an anti-crypto leaning. However, over the last couple of years since he's left office, he's been a little bit more positive on crypto. He's mentioned crypto a couple of times in his different speeches, and I believe they are now taking political campaign money, etc., and they're accepting that in crypto. Donald Trump also had an NFT collection as well, which he also sold. So he's warming more and more to crypto, and he's actually said in a few of his speeches that he doesn't want to drive crypto companies away from the US into other countries, and he wants to try to be as friendly as possible to crypto investment in the US. Very different to Biden's approach. He's obviously against it. Senator Warren is against it. Gary Gensler of the SEC is pretty against Bitcoin. So I would say, to be honest, I don't think it really matters too much on the overall price of Bitcoin and Ethereum if Biden or Trump gets in. But I would say that it's more positive for crypto if Trump was to win that election. So last thing I wanted to show you was the Bitcoin funding rate. So you may ask why I'm showing you the Bitcoin funding rate and what is the Bitcoin funding rate. So why I'm showing you the Bitcoin funding rate is that this Bitcoin funding rate chart actually tells its own tale. So what people do is a lot of people borrow Bitcoin and borrow USDT, etc., on margin, and also use a lot of leverage, right? So what we've actually seen is periods where the funding rate is quite high. What you usually see there is that's usually when you see euphoria in the market. So obviously when the ETFs were approved and they started trading, you saw that euphoria and you saw that spike in the Bitcoin funding rates, and then the price continued to increase from that. What after a while is that gets too high, and then you see that euphoria start to fade, and then those funding rates start to weaken, and then you see a lot of those leverage weak traders who have very high leverage and they start to capitulate, they get liquidated, etc., and kind of the whole market kind of resets itself to reasonable levels again. So that has told a real tell in terms of the price, because when those leveraged weak hands capitulate, that's usually when we see funding rates come down, and we also seen price, like kind of a price reset or going to the lower end of the range, etc. Those funding rate resets are pretty good for the market, and they usually mean that the bull markets can start to resume. So in late April to very early May, we saw lower funding rates. We saw those leveraged traders capitulate, and they went back up to healthy levels. But again, we might be quite likely to see increased Bitcoin funding rates if the price continues to go up for a longer period of time, because the longer period of time that Bitcoin goes up without having a kind of a reset, that is when you see people using more and more leverage, taking more risk, going up in the risk curve, etc. So just wanted to show you that kind of unique chart for now. Thanks very much for listening to this video. If you haven't already, please join the Discord group. Come and chat with our really lively group of people. We're always talking about the markets in there. You'll find an invitation in the description below. And I just want to say, have a great week ahead, and thank you for being a loyal copier of mine. Speak to you soon.